Welcome back to Market on Close. Let's go to Florida. Phil Strebel's standing by, Chief Market Strategist at Blue Line Futures. Watch out for those waves down there, Phil, but I guess it's still better than fire, man.
Oh, I know. It's crazy down here. I mean, you can't do anything. It's practically typhooning out. Did you see that grocery store I just chatted over?
Yeah.
Jungle Gyms. That says it's the coolest grocery store. It looks like Six Flags meets like Whole Foods. I figured it would have been Buc-ee's or something, that gas station. But yeah,
we should have nabbed some B-roll for our grocery conversation. That sounds like some Florida stuff if I've ever seen it. Well, that's the thing about America is like if there's a few things that we have a lot of by like every region. We've got grocery stores, we've got regional banks. That's pretty much.
Very true. Very true. So getting into it, man, these commodities are on fire today, and it even comes as that jobs number blew away expectations. U.S. equities are really tumbling right now, but you look across the board. I mean, even soybean oil, we had a USDA report come out up 13% year to date. Nat gas up 9%, platinum up 9%. It's banging on $1,000. Silver's up 7%. Crude oil took off. Everybody was so bearish on crude oil, thinking Trump, drill, baby, drill. Now look at it, up 6% year to date and breaking out to the upside.
The commodity discussion, Jared Dillon was telling us he thinks basically everything the new administration wants to do is inflationary. We've already got some inflationary forces lingering, so maybe there's a commodity comeback, a heyday brewing. What say you?
Yeah, I think it's a little bit of safe haven buying. It's a little bit of stagflation, because if you start getting equities breaking down, and if you look at all the foreign currencies out there, you take a simple asset like gold and you put it against the euro currency, the Australian dollar, Canadian dollar, Mexican peso, Swiss franc, Japanese yen, it's making new all-time highs right now. So it doesn't matter where you're at, these commodities are moving up, and people that are in other countries where growth is slowing, inflation is holding up, they're really looking to park their money somewhere, and it's the commodity markets are where it's at.
Talked a little bit of gold. Mr. Dillon was thinking 3,000 for gold next stop. Think we could get there this year?
So those estimates, those 3,000 ones were revised lower. We've even seen Goldman Sachs do that around 2,900. We're kind of in that same camp here. The fact you're only looking at one interest rate cut this year, sometime in October, is where it's expected. You do have just a robust economic situation in the United States. It seems like they're not going to be able to cut rates aggressively and provide that tailwind up. So I'd push out that expectation maybe in early 2026 if they can get inflation under control. But it just seems like any kind of move they make, and it's not the administration, it's not like they're the ones that are causing egg prices to go up or this or that. A lot of this stuff is just weather related and things and anomalies that happen that affect these different commodities. I mean, who would have thought that this massive snowstorm comes through the middle of the band of the country? Forget being up, in Chicago and north of that. It's just a lot of different elements that are adding to commodity pressure upwards.
Natty gas, to that point, had a big move. If natty gas gets through $4, then it seems like kind of a big deal. Keep in mind, back in 22 when inflation was raging, gas was going for $10, but there was also like major shortages and fear in Europe. So I don't know if we get back there, but it seems like one of the stronger charts right now.
It is one of the stronger charts. And I tell you what, one of the best commodities that we've been looking at is, and one of our favorites is copper.
Okay.
It often acts as a leading indicator for the inflation and economy, up 6.7%. This year. And it's everything from electric vehicles. They utilize 4 times more copper than traditional gas vehicles. You go to AI, everyone's talking about that, but they're not talking about the infrastructure you need behind it. In energy intense computing is expected to increase copper demand by 3.4 tons per year all the way out to 2050. Plus you have the grid, which we just talked about, renewable technologies. And remember, as we go into the new year, what's everyone talk about? Construction starts back up, infrastructure spending, defense, especially with Donald Trump. So you do a risk assessment. I think that some of the headwinds are slowly passing us and some of the tailwinds are showing up. I mean, if China all of a sudden boosts their economy and infrastructure and development, look out. I think that this thing could really break out to the upside.
All right, good stuff. Watching it right now. Copper made a nice little move here the last 2 weeks. See if it turns into something real. Found the support. Now we'll see if we get the breakout. Thanks, Phil. Have a great weekend.
You too, bud.
Appreciate that. Phil Strebel, Chief Market Strategist at Blue Line Futures.